Very good afternoon and welcome everyone to today's uLaw webinar. The webinar topic for today is Disbursements Demystified. This particular webinar has been approved for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. Once again, I repeat that today's webinar on Disbursements Demystified has been accredited for 1 hour of professionalism credits in the provinces of Ontario, British Columbia, and New Brunswick. And I have also mentioned that in the chat window. Please do use the chat window at any given time to ask any questions that you may have with regards to today's webinar. We'll try and answer them as we go along, or if there are many similar questions, we'll take some time at the end of the webinar to answer them together. Once again, I repeat for housekeeping, if you have dialed in using your computer, and if you're finding challenges with the quality of the audio, we highly recommend that you use the phone numbers provided. Dial into those phone numbers with the participant code provided for a better audio quality. Otherwise, we welcome you and thank you for joining us today. Now, like every other uLaw webinar, today's webinar has a specific agenda. So we're going to talk about disbursements, and we've done these webinars a few times in the past, but this, I believe, is the first time we're doing it in the year 2020. A very important topic at that, because it's important for legal professionals, of course, to understand both the benefits as well as the responsibilities that the firm has when it comes to managing and maintaining disbursements, and why it's very important for you to do so for the hygiene of your firm and for your cash flow and for the accounts receivable and for bookkeeping and compliance purposes. So it does certainly have many facets to why you should manage and maintain them. So what are these disbursements? How can you as a legal firm, law firm, manage these disbursements? Understanding that you do have the trust account as a vehicle that the law societies across Canada have actually fought hard to give you this privilege of a trust account where you as a legal professional can actually take money in advance in trust from a client. And how do you leverage this privilege that's been given to you for, of course, safeguarding your own business as well as for better representation of the society in the eyes of the public is very critical. And given that privilege, we're going to talk about the option that you have of managing disbursements out of the trust account. And what are some of the benefits? And of course, what does that mean when it comes to compliance and some of the bookkeeping discipline that you may need to have to ensure that you're doing it the right way. And then, of course, we'll move on to the traditional management of disbursements. That's through the general business account, whether it's your business's general account, whether you're using a business credit card. Of course, sometimes you as the owner, especially if it's a solo practice or if it's a small law firm, if you are paying out of your own pocket sometimes to manage these disbursements, how do you manage those? Okay, whether it's a combination of any of these accounts with regards to a general account rather than a trust account, how do you manage those disbursements? Okay? We'll probably kind of go through some of the types of these disbursements, starting with the actuals to mileage, travel time, whether if you're going to charge your client for that or not, any outsourced work that you're actually utilizing a third-party legal service to represent you at court, maybe as a stand-in, and if you have to pay them for it, or if you have actually certain aspects of a business are being outsourced to another firm, how do you disperse that to your client? And it's critical, especially when you're dealing with general disbursements, that you capture and record these disbursements as and when they happen, so that you can accomplish a very important task, and that is the recovery of that expense. Okay? Especially when it's general, I'm sure you're aware that you would actually pay for that disbursement, which is nothing but an expense on behalf of the client's file, and you're actually paying for that expense ahead of time, especially when you're paying it out of your general account. So you're using your business's credit card to actually pay for, let's say, a fax, or you may be using your general account checkbook to actually pay for a court fee or an application fee. Hence, you're paying that with the risk of ensuring that when you do generate that invoice and send it to that client, of course, based on the retainer agreement and everything else, but they're going to pay you back that amount, and hence you're able to recover that expense. Now, today's presentation is being recorded and will be available to you on our YouTube channel as early as Monday next week, with the title, the date, and with CPD mentioned in the title of the YouTube video. Okay. And last but not the least, we're going to talk about the expectations from the law societies across various jurisdictions with regards to bookkeeping, maintaining these disbursements, these books, and the documents that you need to generate and provide on a need basis, whether it's a spot audit or a planned audit, or especially when the law society does ask you for it. Okay. Now let's start with kind of fundamentally understanding what is a disbursement and what that means to your business. I'm going to skip the wiki definition of it, but straightly jump into the layman's term, which is pretty straightforward, and I like to understand the last three definitions, which is the layman's term, the accounting aspect of it, and from the law society's perspective. So in a layman's term, really, disbursements are expenses that are incurred by your office on behalf of a client's matter. So of course, it's on behalf of the client, but more specifically, it's on behalf of a specific matter for a client. Keeping in mind that for a single client or a customer of your firm, you may be representing them across multiple matters, and each matter may actually have its own nuance of the types of disbursements that may be involved. If it's a small claim, you may have a certain type of disbursement. If it's a real estate matter, then you're going to have title search and some various other aspects of disbursements that are more specific to the nature of that particular matter. And hence, very important for you to keep in mind that disbursements are expenses that are incurred by your firm specifically for a client matter. Okay. So from an accounting perspective, what that really means is that you have now the responsibility as a firm to record and manage the books, or of course the bookkeeping aspect of it, which is keeping a tab on all the transactions that are occurring with regards to your firm, especially when there's money involved. So you're able to balance the three aspects of that particular transaction. The fact that you've spent it, the fact that you are able to recover it through an invoice, or rather generate the invoice that legally represents the action of you having spent it. And the last but not the least is the recovery of that expense, which really goes back to getting paid for that invoice, which includes that disbursement as a line item which has a value and a dollar and a currency related to that particular invoice. Okay. And I say currency because sometimes you may actually, in certain rare cases that we've seen, you may actually have expenses in some various currencies, in which case you, of course, would have to represent that appropriately in your invoice. From the Law Society's perspective, it's pretty straightforward. The expectation is that you need to manage those transactions in proper bookkeeping with specific documents that are expected by the Law Society for you to generate. Okay? And we're going to talk about what are those documents, what are those Law Society specific items that are expected out of your firm. But for now, all you have to keep in mind is that a disbursement is a term given to an expense incurred by your firm on behalf of a client's matter. Even more important, that you do keep a tab on that particular transaction with three important components in mind. One is how, when, why did you spend that expense? How quickly are you going to relay that information to your client through that invoice? Of course, based on the retainer agreement. Because it's very important, and it's a Law Society policy that you upfront make it very clear about the fees and the disbursements that are involved in you representing a client's matter, right? Very important for you to keep that in mind. So let us assume that you have clearly articulated that in that engagement or retainer letter. Then, of course, it comes down to you following that particular expected result of expenses. Okay. Now that you have an understanding of what those disbursements are, let's have a look at some of the key aspects of how you manage these disbursements. So we spoke about what is a disbursement. Now, how does a legal firm manage these disbursements? The first consideration, of course, by design is, of course, could be matter to matter, or could just be a policy across the firm, is whether you're going to disburse or pay for these disbursements or expenses out of your trust account or out of your business's general account. Okay? Of course, I'm assuming that this particular legal firm has both the trust and the general accounts as vehicles to be used as financial vehicles for transactions. If your firm does not have a trust account, then of course you don't have to deal with it. Then you're pretty much going to be paying your disbursements right out of your general account. But as I mentioned earlier, you as a legal professional have this privilege. The law societies have, of course, fought the battle on behalf of this industry, this legal industry, and has created this vehicle called trust so that you as a business and as a professional do not have to necessarily deal with unpaid invoices, bounced checks, you not being able to recover the money for the work that you've put in. Okay? One of the very few professions that can actually say that they have something like that. So the point really is, if you are able to understand the nuances of how best to manage the books of trust accounting, you may find it easier to come to terms that it may be a better option for you to manage, especially if you're not doing today. All this rambling away is just to say, give it a consideration and see if there are some positives that you can gain out of that trust account for your business. Because you're basically taking money in advance in the form of retainer, where you have it in, you're going to say, well, I'm not going to be working with you unless I have a retainer involved, because I want to safeguard the work that I'm going to put in to be successful in your file. I don't want to be second guessing whether this invoice would be paid and I send it to you, Mr. Client, and then you don't pay it. It's a bounced check, the credit cards fail. Then it almost becomes a collection agency job for your law firm to deal with that client. So the trust, of course, gives you that comfort of taking the money in advance. And of course, then you have certain key responsibilities. And trust disbursement is one such opportunity. And of course, we'll talk about what are those responsibilities dealing with the trust disbursement. So let's say you've determined that you're either going to use the trust account or the general account, or maybe in some matters, a combination of both. It's important you determine that you're going to be utilizing these accounts. But what's common across whether you use it across trust or general? What's common is the date when that particular disbursement occurred. So an expense has occurred, very important to capture when it happened. You don't have to get as granular as the time, it just has to be as specific as a date. So when was this paid? How was it paid? So if it's a trust account, is it a trust check that was written to the bank for that application or court fee? If it is a business general account, was it the business credit card, or was it the general account again being used? Or was it the owner's pocket? Again, depends on the type of disbursement. How did you pay for it? And what was the reason for that expense or disbursement? So I mentioned briefly, it's a court fee, it's an application fee, it's a travel mileage, it's the fax, etc. So you really want to understand and define and articulate on paper as to why, how, when, and what the reason was for that particular expense. Now earlier I also mentioned that it needs to be also specifically tailored towards a client's file. So that's kind of the next key step, is having captured when this disbursement occurred, how you paid for it, and the reason for it. Then the last aspect is for whom was this particular disbursement paid on behalf. Perfect, it's a client, that's a given, but you want to get more specific to the matter or the file for which that disbursement was paid out. So recording the client's name as well as the matter number or matter that this particular disbursement was related to. Now, an additional consideration if that particular disbursement was paid out of your general account is deciding what component of that disbursement is going to be invoiced and when to send that invoice. For example, if you've actually taken a client out for a meeting and you took him to Starbucks or to a second cup and you actually paid for it, and let's assume that it's agreed that the client does pay you back, and it's a moot point, but let's say you meet with someone else and then you are disbursing that to the client. And if you did pay the tip over and above the original fees, or the disbursements rather, then you decide whether it's right for you to invoice that tip amount as well or not. Okay, it comes down to your firm's policies, the retainer letter, credibility, etc., and when to send the invoice. Now, for certain matters, for certain cases, especially if you're dealing with corporate law, you may have a retainer or an engagement letter which states that you would generate a monthly or a bi-weekly invoice, so a time-based invoice, making it easier on the business to manage these expenses and invoices, right? So then the question really comes, do you wait and capture all the disbursements that you have paid out for that entire month and represent all of them in a single invoice or on the agreed upon timeline? If it's not what we've seen is if it's really not a corporate law situation, if it's really not been agreed upon like that specifically, then you should consider writing a retainer letter, engagement letter, which states that you would generate an invoice as and when disbursements occur, as and when dockets occur. So the sooner you're able to generate those invoices, the sooner you're able to recover that expense. And that's why it's a very smart option to generate pre-bills or previews of a potential invoice for you to first and foremost review the chronological order of the items that are going to be represented in that particular invoice, aligning them with the agreed upon letter of engagement. Sometimes it can also be sent to the client just to get their blessing to say, Mr. Customer or Ms. Customer, this is exactly what we agreed upon. Here is a pre-bill for you to review. Of course, it's an extra step, but it certainly helps with the headache of not having to generate an invoice, assuming certain things, sending it to the client, waiting for a payment, and then they don't follow up, and then you have to follow up with them. And of course, last but not least, you want to record that invoice number so that now you have an audit trail of when it was generated based on the terms and conditions that you've agreed upon, whether it's a net 30, a net 15 payment term, gives you the opportunity to follow up with that client if you have not received that payment yet. Okay? Now, if you have used the trust account to pay for that disbursement, then that money is taken right out of the trust account. But let's say you've got a retainer and you had included potentially the $100 of court fee that you know that is going to be part of that file. In that case, you don't wait for the client to pay you. You generate the invoice and do what's called as a eligible trust transfer by recovering that right from paying yourself from the retainer, from the trust to the general. Okay, so either if there's no trust transaction involved, of course you have to generate the invoice, wait for the payment. But if a trust retainer situation was involved, then of course you're safeguarded by that. You pay for the disbursements and then you move that money. So if you've just paid $100 out of your general account and if you've got a $1,000 retainer and you've just generated that invoice, well, you've just freed up that $100 to pay yourself because that's the eligible amount you've earned yourself. Okay? Now, how did you spend that money? And it goes back to that first question that you determine the style of how you pay for this disbursement, whether you do it from your trust or general. Of course, this is a decision every legal firm makes for themselves, every practitioner makes for themselves. These are just some recommendations. One recommendation is why not pay straight from the trust? And we firmly believe, as I mentioned, for all of the reasons that I mentioned earlier, the privilege that you have. Sometimes it's just, a discomfort of how much paperwork is involved and having to deal with trust that stops someone from doing it. But we're just sharing with you that in today's day and age, with the advent of technology and all the other tools that you have in your arsenal, you do not have to worry about that headache. So if you're comfortable, certainly do exercise the use of the trust account. But if you are going to use the trust account, certain things to keep in mind. Please to record all the other pieces of information. When did it occur? What was the amount? Were there taxes involved? How was it paid? And what was the client and the matter? Okay? Our key explanation or justification rather for the payment of disbursement from trust is if it is not your money after all. If you're not looking to make money out of the disbursements really, then representing it and paying it right out of the trust actually reduces the amount of bookkeeping required, believe it or not. It's actually going to be easier for you to represent that trust ledger, disbursements journals right out of the trust account faster and easier compared to paying it out of general, generating an invoice, waiting for a recovery, things of that nature. The other aspect is, let's say, in a very pragmatic situation, you're using a credit card that you have and you're earning points on it. And of course, those are some added benefits that you have out of paying out of your general account. Then by all means, that's your justification as to why you would want to use the general account. But if you don't have such reasons, and if you're considering between trust and general, we believe trust is a very important vehicle for you to use even for disbursements. Okay, so when do I recover the disbursement? And we've spoken about this briefly. If you're using the trust account to pay for a disbursement, let's say for that court fee of $100 in dealing with that file, and if you use your trust check, the money is being withdrawn right out of your trust account, and hence it's gone out of the trust account, so there's no component of recovery. It was there for a purpose and it's been taken away. You're just showing that that happened in your ledgers and journals. Now, of course, if there's a retainer involved and you've paid it out of your general account, as soon as you disperse that client, you generate the invoice and you recover that by doing the trust transfer for that eligible amount by moving money from the trust to the general account. So the same court fee of $100, you've actually taken a $665 retainer, considering there's $565 for the legal fees, $100 for the court fee, and you've got a $665 retainer from the client up front. Now you've just paid $100 of disbursement to the court using your business check out of the general account. Then you generate the invoice. You don't wait for the client to pay you because he's already paid you or she's already paid you in a retainer. All you're doing is you're transferring from the trust account into the general account exactly that $100. Okay? So you do this in real life by logging into your online bank or actually visiting a bank and taking the help of the teller, of course. And of course, if you're in Ontario, if you're doing a trust transfer, I'm sure you're aware that you do have to fill out a Form 9A every time you do a trust transfer electronically from the trust account into the general account. Now, the third use case or example is if there's no trust, there's no retainer involved, and there's just a strict payment of these disbursements out of your general account. And of course, you pay that $100 court fee. You generate that invoice based on now the agreed upon timeline. If you agreed that you would generate an invoice every month, then you wait for that end of the month to include this $100 disbursement along with other legal fees and other disbursements so that it's a more collective invoice. If you've not agreed upon such terms and conditions, then it's in your best benefit, your own benefit, to be able to generate that invoice as and when that transaction occurs so that you're recovering those money back to your firm. In which case, you would pay for that $100 court fee, right away get to your firm, or have your system do it, or you can just log in online, generate that invoice for that $100 disbursement, and then send it to a client. Based on your payment terms, you would wait for the client to pay you back. Once they paid you back, now that disbursement is taken care of. Okay? So there's only 3 or 4 use cases when it comes to dealing with disbursements. Which style you take for each transaction, for the nature of the disbursement, nature of the matter, or the overall policy of the firm is totally dependent on yourself. But before I move on to the next slide, an important component of all of this is that at the end of the day, regardless of the route you take to manage and pay yourself for these disbursements, for each route that you take, there's, of course, a DNA footprint of that audit trail in a specific document, such as a ledger or a journal. Okay? And that is what is expected by the Law Society. So if you've actually used the trust, then there's a trust ledger and journal. If you use the general, there's a general disbursements journal. So depending on the route you've taken, the expectation is the footprint of that transaction and the audit trail of that is written in a document. Whether you do this manually or whether you use automated software to do it for you, doesn't matter. But it's important that you're aware that those transactions have to be recorded, and that's what the Law Society wants. This is an important slide, especially if you're considering trust, certain general thumb rules, if you will. In general, if it's a billable, okay, or an actual, if you will, if you paid $100 and you're recovering $100, general thumb rule is that you could use trust and general. Okay. If it's a unit rate, mileage, travel time, things of that nature, then specifically use general. If you're going to be recovering expenses with either a profit or a loss margin, then do not use trust at all. Again, only use general. So as long as it's an actuals, what you paid is what you're recovering, you definitely use the trust account. That's because the trust account needs to be managed and maintained with the highest scrutiny of money coming in and leaving and being able to account for it. Okay? So if you've had a tip and you've had this and that, if there's an extra profit margin because you purchased software in bulk and then you're dispersing it to each client separately, there's many different components of how you can manage disbursements. Then if it does come with those extra frills, then you don't want that to dampen the sanity of your trust account. And hence, it's best to avoid, as especially if it's not actuals. So if it's actuals, even if it's outsourced consultancy work, doesn't matter. If you're just passing the money along, if it's the actuals, then trust account is fantastic. So any government fees is a great example of how you could use a trust account. $100, many of these fees don't have taxes involved, so it keeps it clean, straightforward. Very important that you could use the trust account. For all other types, please do consider the general account. All right. So now that you've kind of had an understanding of what disbursements are, we've then talked about the key pieces of information that needs to be captured when it comes to disbursements. And then we've briefly touched upon the different routes that you could take when it comes to handling how you pay for these disbursements. One of the last components truly of this webinar is to really highlight the expectation from the law societies when it comes to you representing this. We spoke about the DNA of those transactions. This is where it's left. The idea is when an auditor looks at these ledgers and journals, they have a complete understanding as to what happened within that particular client's file when it comes to managing disbursements. Okay? If you really look at a close look at this first trust ledger, even if you were to look at the first two line items. On August 30th, for this client, Kim Kirby, for this particular matter, loan to Taylor, of course, this is a little excerpt right from the bookkeeping guidelines of the Law Society of Ontario. What would have helped is also have a file number, which you do find in many of the legal accounting systems today, including uLaw. But assuming loan to Taylor is really the matter, you see that there's a mortgage advance of money coming in on the 30th of August. and then that was transferred over to Taylor as part of that loan agreement, and that was paid as a disbursement, leaving the balance at zero. Okay? So, by reviewing this document, someone gets a good understanding of the flow of money in and out. If you look at the one on the side, you would notice that there is a general ledger for Jackie Jones for a legal advice that she had received, where the lawyer or the legal professional in this regard had generated an invoice on the 2nd of July, and the invoice number was 0001, and that was for an amount of $100 plus jurisdictional tax of $13, leaving the balance at $113. And the client paid this legal professional, the firm, a payment of $113. Of course, even more important than if you capture the check or the mode of payment as well, which is then captured in the journal. Okay? So that was a disbursement. So it could have been a $113 disbursement. In this case, it was fees, but it could have been a disbursement as well. Disbursement journals. Very important document. During many audits, we found that our clients have often had to review and show an auditor the disbursement journal, so it's quite often asked document. And the disbursement journals are maintained for both your trust and your general account. And a very important column or important piece of information that the journals carry that your ledgers don't is the method of payment and purpose. If you really take a quick look at the ledger again, and I do apologize that I'm going back and forth, but the ledger pretty much has the date, what was it for, how much was the amount, what's the balance, right? Whereas the journal carries extra pieces of information, which is the date, the method, how was that $40,000 paid, or how was that particular $113 payment received? What was the purpose? Okay, talks about the court fee, the application fee, all of that. So let's have a look at this particular general disbursement journal, where you can clearly see that on July 1st, the method of payment was checked, and that was the check number, and that was paid to Larry for rent for an amount of $565, which had a $500 and a $65 tax component. So it really spreads out the details of the financial transaction. An important document or a compliance document that's often asked is that of a fee book. Okay? And this is part of the expectation of the Law Society. So we spoke about the expectations being the ledger, the disbursements journal, and now the fee book. The fee book does keep a record of all the fees and disbursements that were generated through an invoice. That needs to be recovered, of course, from the client. Because the fee book is the one that captures the invoice number, which is the primary key or the unique identifier of a set of transactions, financial transactions, or could be just a single transaction. So it records the invoice number, which particular client was this billed or generated, associated taxes based on the line item and the nature of the line item, and the total amount. So here's once again an excerpt from the bookkeeping guidelines of Law Society. It has a date, it has the actual invoice number, the client, the fees billed, or in this case, could also be disbursement. There you can see there's a specific column that differentiates between legal fees and disbursement. and the associated taxes. Okay, so if there's a court fee that was paid out of your general, then that would be a line item here that on July 6th invoice, it could have been part of 002 or it could be a separate invoice by itself. There's a $100 disbursement that's part of that bill. Okay. So I think we've kind of given us enough time because I want to leave some time to kind of walk you through what this really means from a perspective of today's practitioner, the tools and techniques that you can very easily purchase to help yourself and your firm if you're not doing that already. And of course, this is CPD. We're not going to be showcasing our product uLaw, but we're just utilizing that as an example to showcase the concept. You should certainly do your homework in picking the right tool that's right for your firm, right from a cost perspective, convenience, ease of use, support available for you to manage, and many factors that may other govern your decision. But our recommendation is when you do make those considerations, please do consider software that has the legal accounting component strictly into it, where you're not having to deal with multiple systems to accomplish a task that otherwise a legal accounting system by itself can accomplish for you, because it does lead to a transaction being associated with the actual expected ledger, journal, law society, documents specific. Okay. Especially if you're dealing with trust account, makes it very, very more important that you're dealing with legal accounting software, because it's about the accountability and more importantly about the compliance. So final summary, if you will, as why do all of this? I mean, why is it this important that we actually have a CPD session on disbursements? Why is it that important? It's important because often law firms or legal firms tend to lose money in disbursements, whether it's due to lack of tracking it on time, or not having a technique or set of process or tools to track it on time, not being able to represent it in an invoice on time based on the agreement with the client. And many times it comes down to affecting your bottom line. Because if you expect, and if you've actually paid it already through your general account, then it's affecting your bottom line right away, because it adds to your expense book. And if you've not recovered that, then that's going to add to your profit, because the fee minus expense is really, or the revenue minus the expense is really your profit. And if you've not recovered this expense, then it's going to add to the expense, make it heavier, and hence it's going to drop the overall profit margin. And if you're not going to generate these disbursements on time, there's an opportunity for your client to actually negate that invoice. If, let's say, you paid for an invoice or a disbursement 6 months back, and for whatever reason you haven't generated an invoice and recovered it on time, then many times the invoice, if you generate it at a later time, the client may say, I'm sorry, I cannot pay you for that because this matter is done. And more importantly, you want to be very specific about your profit margin on a time period basis. At least on a monthly basis, you should have a good understanding of what your profits are for your business, or profit loss, whatever it may be. We're always hoping that it becomes a profit over time. Initially, there's going to be expenses, of course. As it is, you're going to have office expenses that are going to add to this. On top of that, if you're going to add the client expenses to it as well, and you're not recovering it on time almost just means that it's an additional office expense, right? So keep in mind that keeping a tab on disbursements, having a process to be able to find the right route to manage disbursements, the right route to recover the payment of these disbursements in a timely manner is very key. Okay. So I'm going to spend maybe just the next 10, 15 minutes, and I'll switch gears real fast to take you through a simple use case. And I'm logged in, of course, into my Fixtures Legal Professional, and this is the uLawPractice dashboard, where it kind of makes it very specific to the important components that you need to be aware of, all of the invoice pending matters, etc. So I'm going to jump quickly into a client. So let's pick Lauren, and let's go create a quick matter for Lauren, and then talk about those three routes that we wanted to take. The first step is the retainer letter that we agreed upon. I'm going to assume that you've already signed the retainer letter, engagement letter, etc. For purposes of today's webinar and the subject of the webinar, I'm going to strictly, okay. I'm going to let me start a new matter just to keep this simple, so that I can also talk about specifically how you deal a disbursement for a particular file and not a client. So you've got Lauren, and there's already a will matter we're dealing with. I'm going to create a new matter, action, new matter, and I'm going to say it's a small claims. Why not? Okay. So let's take the first route that we considered, where you're actually going to be utilizing a trust account, and let's assume that the legal fee is $565, and there's a $100 application fee for this particular matter. So there's a total of $665. In some matters, of course, you don't know the disbursements to that point, in which case it's fine. You take an overall retainer of $1,000, and then you sometimes will have to pay back the client, reimburse back the retainer if those disbursements, didn't maximize as you expected it, right? So that's a refund of a retainer. But just for the purpose of today's demo, just to prove a point, let's go ahead and accept a retainer, a new retainer of $665. And let's say Lauren paid us a check, $665, and I've deposited this into my TD trust account. I'll give Lauren a receipt for that payment, very important. Now, of course, we're going to make it very specific that this particular retainer was for the slip and fall matter, especially if there are multiple matters involved. Okay? And of course, uLaw did that load balancing because there's about $400 expected from Lauren for the will estate matter. And then once we receive that $665, we're just trying to balance the monies for you. So that's the retainer receipt. Let's leave that alone. So there's $665. Let's say I'm going to put all my legal fees. Okay. And I'm going to say, all right, complete or completed matter fees. Something random like that. And I'll just toggle this to say a flat rate of $500. And I'll say overall I spent 2 hours on this matter. So this is a typical docket. This is a flat fee docket. I just wanted to get that out of the way so that the matter looks more real. But then there's, of course, the actual $100 application fee we were talking about, which is the disbursement that's involved in this matter. So if you're going to pay this disbursement right out of trust, then you're just going to actually write them a trust check. But in a bookkeeping, how do you represent that? So this is money coming out of your trust account, which is really a withdrawal. And hence you have the ability to pay the disbursements from the trust account. So you're still capturing the date when it happened, the actual amount, how was this paid. So it's a trust check with a fancy number. What was it for? And it's an application fee. And who was this paid to, right? Let's say it's paid to the Ministry of Attorney General and coming out of my trust account. You could possibly print the check if you're basically writing that from the bookkeeping system, or you can just write this in your hand and just represent this into the bookkeeping system. So this particular action that you're doing is recording this transaction. We mentioned earlier in the presentation that one of the important aspects of a legal firm is to be able to record transactions, especially financial transactions that occurs as and when they happen. So now this is how you'd record that transaction into a system. This could be an Excel sheet, in which case it will be a different way you enter data. Into a system like uLaw, this is how you'd enter data. Each system has a certain learning curve of how you learn how to use that system to enter the data. But at the end of the day, as a legal professional, it's important for you to keep in mind that you do have to capture it, whatever tool you may use, as and when it happens. Now, an interesting thing happened. The trust receipt, if you noticed, went down from $665 to $565. What that really means is if I were to generate a trust ledger, let me go into my compliance, which really has all the compliance documents. I'm going to generate the client's trust ledger. As you know, the ledger has the date, the particulars, the amount, the ins and outs of the money. So I'm going to choose the month of February, okay? And let me just generate that ledger. Keep in mind, we have not yet recovered the $565 legal fees, because that's where you would have to do the eligible transfer. So if you look at the question mark right here, you would notice the $565 is yet to be moved. Okay? Whereas the $100 has left the trust account, because I'm not even invoiced this. And let's just search for our client, Lauren. And there you go. So if you look at the slip and fall matter, you will notice that a retainer was received from her for $665. Now, when I paid out that disbursement right out of the trust account, it's automatically accounted for. So the footprint is already accounted for in this trust ledger as $100 having left directly out of my trust account. Now, I don't have to generate an invoice to recover this $100. I don't have to transfer money from my trust account into my general account to recover this. This was never my money to be made, because this was an expense. I'm just ensuring that that expense does not add to my expense as a firm's expense. That's all. Which is pretty straightforward, right? So let's go back into that particular matter. Let me go ahead and generate an invoice. I'm going to skip the preview because I have limited time. So I'll skip the preview. I'll generate the invoice. And now that I've generated the invoice, I can transfer the $565 of legal fees. Of course, it has nothing to do with disbursements, but I'm just trying to bring a logical closure to the slip and fall matter. Okay. Now that I've generated the invoice, I can recover that legal fees by doing the trust transfer. And again, in this particular example, we're not recovering or doing trust transfers for disbursements. We're just doing it for the legal fees. So I'll do it from moving it from my trust to general. Again, this is data capture 101. You're capturing in your bookkeeping system that this particular transfer between the trust into your own general account occurred on the 21st, and you could have just written a check. Or if you're in the province of Ontario and if you did an electronic fund transfer, we recognize that and we allow you to fill the Form 9A, where you just download it and have it as part of your documents. Now, in the invoice as well, you would notice it's important to show the DNA, the audit trail. The legal fee was a $500, with taxes was $565. But here is an important audit trail of what happened with monies within a trust account. Okay, received $665. The fact that you paid a disbursement right out of the trust account has been taken out, leaving the balance right away at $565. And now that you've generated this invoice, it tells your client technically they don't owe you any amount. It's now on your onus and your firm's responsibility to do the trust transfer to make the money, and which you just have. You've just transferred it, and this matter is done. So let's go ahead and mark this as closed. Okay? Now when I go back to my trust ledger, which is the law society's expectation, let's look at this from this first route that you've taken. Let me go back to my compliance. I'm going to regenerate. Oh, this is the wrong place. I have generated the compliance for my accounting, my client trust ledger. I could also do it specific to a client, so I can just search up Lauren specifically, or I could choose it for a specific month as well. Okay. If I were to choose this for Lauren, in fact, let me just do it for the month. This keeps the whole audit compliance in play. Okay, so I'm just going to choose the monthly option. Just keeps it to the February month. And here you are. Now this is the original trust ledger before we did the trust transfer. And here is the new trust ledger. Which has this third line item about the trust transfer. In the first document, when we had not done the trust transfer, there were just 2 line items in this particular trust ledger, leaving you a balance of $565. But now there is no balance because you've just transferred that $565 by doing this legal invoice number 3172. Okay? Now, what about that journal? So here is the client's trust receipt. Same thing, we can do it for the month of February. I'm hoping that this is making sense as we're moving along. I know there's going to be a lot of button clicks and reports to be generated. But Claude, if you actually look at it, there is a receipt of $665 into the trust account, and that's what's being mentioned here with all the details involved. If you look at the trust payments, it's going to capture that $100 of trust disbursement that you paid to the Ministry of Attorney General on this particular date for this particular client, and specifically more the client's file. And there you go. Here's the February 21st, a check that was written for 123456 was paid out to the Ministry of Attorney General for the slip and fall matter of $100. And this transaction is for the trust transfer. So you can see it's an electronic fund transfer, and it's a trust transfer from the trust account, leaving the trust account rather. That's what this is. The payments that were done, that is the money that's leaving the trust account. Okay? So you can see how a particular route that you take automatically leaves all of the details and the data to be captured in the document that's required for Law Society. So you're pretty much compliant day one as long as you're capturing the data in the right channel at the right time. So let's go ahead and create one last matter. I hope I have the time. And this, I'm just going to make it a general account. I'm going to say this is a POA. And let's assume that there's a, and it could be for the same amount, it could be for a different amount as well. In which case, I don't have a retainer involved. I'm just going to go ahead and say I've got ticket Today's webinar is for 1 hour of professionalism credits. So we've got $300 legal fees, which automatically will relate to $339. And now I'm actually going to pay the disbursement not from my general, but I'm actually going to pay it from, not from my trust rather, from my general account. So let's have multiple general disbursements maybe. So we'll say mileage. And you can decide how much you charge for the mileage. Okay, so now there's a $40 disbursement from general. There could also be a $100, let's assume there's a court fee of $100 that you're paying out of your business credit card. You can right away, you can see there's $45 disbursement. There's another disbursement that you'd pay for court fee. And let's say it's tax exempt. Now it's important for you to tell your own business, how did you pay for it? Let's say Ministry of Finance, and this should, let's say, coming out of your general account, and you wrote them a check. Okay. Now you've had a total of $100 plus the $45 for the travel mileage. With no retainer involved, the only option you have is to go ahead and generate that invoice. Of course, it would be very important if you can generate that pre-bill or preview, which just puts a good watermark, making sure that you don't accidentally send it to the client. Or if you intend to send it to the client, you can send it to them with that watermark so that they can review it and approve your invoice. I've seen that quite a bit with the corporate files that legal firms deal with. They do have to send a pre-bill, get it approved, and then generate the invoice. But you can clearly see in this particular matter, you've got a $300 legal fee. Now you have multiple general disbursements. You've got a $45 disbursement for the mileage and a $100 with no taxes. And the other one, you had a 13% tax, and the court fee you can see, so there's a mix and match, leaving with a total of $145.20, and that's the payment due. Now that you've generated the invoice, of course, you can leave your client with a little payment option, just like that, where they can actually enter their credit card information right away and pay for it. Or you can do the old school way of following up, asking them to make the payment. So today, it's actually right up in the chat window. The title of today's webinar is Disbursements Demystified. It's also there in the title of the email, and it's 1 hour of professionalism CPD credits. So once the payment has been made, and I do apologize if I'm going slightly above what was planned for, but it's just to highlight, of course, the aspect of how a particular route that you take relates to the disbursements and the Law Society's expected documents. It's important that you apply that payment of the $100 towards the specific matter that you're dealing with. Okay. So once that has been applied, you're going to notice that the ledgers and journals would quickly represent that particular line item of payments. With no trust involved, there is no trust ledger or trust disbursements. In this particular matter, when the auditor looks at it, they know that for Lauren's speeding ticket, that you strictly maintain it out of the general account. So when you're generating your ledger, you're basically doing a general disbursement, and this would capture that $100 court fee as well as the $45 travel mileage. Okay, so with that, and with this last document, I will try and wrap up this webinar. But the idea behind this webinar was to walk you through what disbursements meant, how best to manage them, the different options that you have, and how the options that you take should be well designed so that it leaves with the documentation that is expected out of you, both as a business as well as a law society profession. So you can clearly see the court fee of the $100 that was paid for Lauren's particular matter. Okay. So with that, I will bring this webinar to an end. I do apologize for having gone a little bit further than the agreed upon time. This webinar is available for you to play back and review it, and it's for 1 hour of professionalism credits in the provinces of Ontario, British Columbia, and New Brunswick. I once again thank everyone for joining me today. It will be available on our YouTube channel as early as Monday. And once again, the title is Disbursements Demystified. Thank you, everyone, and have yourself a fantastic weekend.